What a wild day it was for shares of Better Home and Finance, ticker symbol BETR. On Monday, the stock shocked the market, skyrocketing as much as 46% to close at $49.98, and during the frenzy it briefly touched an incredible intraday high of $94. To put that into perspective, we're talking about a company that only recently was trading in the low double digits, suddenly becoming the center of attention for traders, investors, and financial media alike. And at the center of it all is one man, Eric Jackson. A well-known hedge fund manager and commentator, Jackson has been publicly talking about BETR as one of his top new ideas, going so far as to call the company the Shopify of mortgages. That endorsement, combined with the excitement around artificial intelligence and financial technology disruption, lit a fire under the stock. But the big question now is this: is Eric Jackson right? Or did the market just get carried away on a one-day surge of hyper momentum? In this video, we're going to break it all down. We'll cover what exactly happened during Monday's trading session, why Jackson is so bullish on this name, what the company is actually doing in the mortgage and home ownership space, and of course, the risks and challenges that investors need to keep in mind. Because while a 46% surge in one day looks exciting, what matters most is whether this company can deliver over the long run. Let's start with Monday's unbelievable price action. BETR opened the session already showing signs of strength, and as Jackson's comments gained traction online, the stock just kept climbing. By midday, it had surged past $70, and at one point, it even tagged $94 a share. That's nearly a double intraday move, before eventually pulling back and settling at $49.98, still up a massive 46.6% on the day. Moves like this are rare in the market, especially for a company that's not announcing blockbuster earnings or being acquired. Instead, this was a clear example of how powerful influential voices can be when combined with a market that's already looking for the next big disruptive story. Traders rushed in, shorts scrambled to cover, and liquidity dried up as momentum snowballed. The lesson here is twofold. First, markets can move incredibly fast when attention focuses on a single name. And second, it's a reminder that volatility cuts both ways. An intraday spike to $94 only to close at $50 shows how quickly sentiment can shift. For long-term investors, days like this are exciting, but they also raise an important question: what's the fundamental story behind the fireworks? So, what is this company that just stole the market spotlight? BETR is Better Home and Finance Holding Company, sometimes known as Better.com. They position themselves as a digitally native home ownership company, aiming to disrupt the traditional mortgage process. In plain language, BETR wants to make buying a home, securing a mortgage, and insuring that property faster, cheaper, and more transparent. They've built a platform called Tinman, an AI-driven underwriting and processing system that automates much of the mortgage workflow. They also have Betsy, a voice-based AI loan assistant that can interact with customers and streamline loan applications. The company's pitch is that they can do mortgages more efficiently than traditional banks or mortgage brokers by cutting down paperwork, reducing human error, and speeding up approvals. And that's not all. BETR also plays in adjacent areas like insurance and real estate services, meaning they want to capture the entire ecosystem around buying a home. In other words, they're not just a mortgage originator. They're trying to build a technology-first platform for the entire home ownership journey. That's where the Shopify comparison comes in. Just like Shopify built an end-to-end platform for small businesses to run their online stores, BETR wants to build an end-to-end platform for people to manage the process of owning a home. Now let's talk about Jackson's actual thesis. He's been very vocal that he sees BETR as a company with the potential to transform the mortgage industry. His phrase Shopify of mortgages is catchy, but what does it mean in practice? For Jackson, the core idea is that the mortgage industry is massive, trillions of dollars in size, but it's also antiquated. It's filled with paperwork, slow processing times, and inefficiencies. By introducing automation and AI, BETR can dramatically reduce costs, speed up transactions, and ultimately win market share from incumbents who are stuck with legacy systems. He also highlights the recent debt restructuring with SoftBank, where BETR retired over $500 million in convertible debt. That move improved the balance sheet, removing a big overhang that had worried investors. In Jackson's view, this reduces financial risk and sets the company up to focus on growth instead of worrying about liabilities. Finally, he points to growth metrics. In the past year, funded loan volumes are up significantly, revenue has been increasing, and while the company is still losing money, the losses are narrowing. BETR itself has set a target of reaching break-even on an adjusted EBITDA basis by 2026. Put all of that together, and Jackson sees BETR as a high-growth disruptor in a massive market, trading at a valuation that, in his opinion, doesn't yet reflect the upside potential. So why did the stock soar almost 50% on one endorsement? The answer lies in the intersection of fundamentals and narrative. On one hand, there is a genuine business case here. The mortgage industry is ripe for disruption. AI and automation are hot themes in the market right now, and investors are looking for real-world use cases. Add in the SoftBank debt cleanup, and there's a credible story that BETR is improving its financial footing while pursuing a bold growth strategy. On the other hand, markets love a simple, powerful narrative. Shopify of mortgages is exactly that. It's easy to understand, it sparks imagination, and it gives traders a mental shortcut for how to value the business. Whether or not that comparison proves accurate, it was enough to ignite a wave of buying interest, especially once the stock started running and momentum traders piled in. But before anyone assumes this is a straight shot higher, we need to talk about the other side of the story. Because while Jackson's thesis is compelling, BETR still faces major challenges. First and foremost, the company is not profitable. In the most recent quarters, revenues were in the tens of millions, while net losses were still in the tens of millions as well. Scaling up mortgage origination volume is critical, but until they can consistently cover their costs, profitability remains a distant target. Second, the mortgage industry is heavily cyclical and highly sensitive to interest rates. When mortgage rates are high, fewer people buy homes or refinance. That's been a major headwind for the entire sector in recent years. BETR might have a more efficient model, but it can't completely escape macro conditions. Third, there's execution risk. Building and scaling AI-driven platforms is difficult. The technology needs to not only work but also comply with strict regulatory requirements. If BETR stumbles on execution, either technologically or operationally, the market's patience could wear thin. Finally, there's the issue of valuation. After a day like Monday, the stock is no longer a hidden gem. A surge to $94 intraday means a lot of future growth was suddenly priced in, even if only temporarily. Investors need to weigh whether today's price reflects realistic expectations or just short-term enthusiasm. So where does that leave us? BETR's 46% surge on Monday was one of the most dramatic moves we've seen in the market this year, and it highlighted just how quickly sentiment can shift when a big-name investor throws their weight behind a stock. Eric Jackson's thesis is straightforward but powerful. BETR has the potential to become the Shopify of mortgages, disrupting a massive industry with a more efficient, AI-driven model. The company has shown early signs of progress, with growing loan volumes, rising revenues, and a cleaner balance sheet after retiring significant debt. At the same time, challenges remain. The path to profitability is still years away, the industry is subject to macroeconomic pressures, and execution risk is very real. Monday's price action showed the excitement, but it also showed the volatility, with shares rocketing to $94 before closing near $50. For investors, the key is to separate the narrative from the numbers. The story is compelling, and Jackson's endorsement adds credibility. But ultimately, it will come down to whether BETR can deliver consistent results over time. To wrap this up, BETR is now firmly on the radar after Monday's fireworks. Whether it's truly the Shopify of mortgages or just a company riding a wave of market enthusiasm remains to be seen. What we do know is that Eric Jackson's endorsement has sparked enormous interest, and for better or worse, BETR is going to be a stock to watch closely in the months ahead. So, what do you think? Is Jackson onto something with BETR, or is the market getting ahead of itself? Let me know in the comments below, and don't forget to like and subscribe for more deep dives into the stocks making headlines.